Hi, welcome everyone to our webinar on the CARES Act. This is a follow-up to the one we did over a week ago regarding the FFCRA. So this will give you an overview of the CARES Act, and I will also say we will be sending this out to everybody. And any questions you may have, please reach out to Preferred Benefits. We will keep you as updated as we can. So on March 27th, the Coronavirus Relief and Economic Security Act, or the CARES Act, was passed. Now, this was actually phase 2 of the FFCRA that I talked about a week ago. Phase 2, which is the CARES Act, provides $2.2 trillion in federal funding to address the COVID-19 crisis. The CARES Act expands several Families First Coronavirus Response Act coverage provisions and broadens the tax-advantaged coverage options, also provides economic stimulus for individuals and businesses. Part of the big push for this CARES Act is individuals with will receive a non-taxable stimulus check. And if you've been watching the news, there are varying dates on when those should come out, but it should be very soon. An individual will receive $1,200, joint filers $2,400, plus $500 per qualifying child. Qualifying children are under age 17 at the end of the tax year, and the child's payment will go to the legal guardian. The payment is based on your 2019 adjusted gross income, but if you have not filed for 2019, it will be based on your 2018 filing. This payment is not impacted by wage garnishments, including student loan and IRS garnishments, although people behind in child support may not receive payments. And the refund begins to phase out if the individual's adjusted gross income exceeds $75,000 for an individual, $150,000 for joint filers, and $112,500 for head of household filers. The credit is completely phased out for individuals with no qualifying children if their adjusted gross income exceeds $99,000 on an individual basis, or $198,000 for joint filers, and $136,500 for head of household filers. So the Act requires some health care coverage provisions, and these are in addition to things that were already released in the original FFCRA. So this Act requires all fully insured and self-funded health plans to cover all diagnostic testing at 100% and all telemedicine visits related to COVID-19 to be covered at 100%. When a vaccine or treatment is developed, it too will be covered at 100%. For our fully insured clients, this is automatically going to be added to your policy. For our self-funded clients, the treatment aspect is going to be on an individual basis, and your preferred benefits rep will be reaching out to you to determine whether you make a policy amendment to add that. The IRS has also included telemedicine services to be allowed as a covered benefit prior to deductible for all your HSA plans through next year. Right now, all of these items sunset as of December 31st of this year. Those telemedicine visits on your HSAs are payable as a preventive service. The IRS also backed off the change it made a few years ago and is now going to cover over-the-counter medications under your FSA, HRA, or HSA without a prescription. However, you have to modify your plan document if you have an HRA and you wish to add over-the-counter items. In addition, female hygiene products are also considered a qualified medical expense for any pre-tax fund. Your plan document does need to be modified to add those coverages if it is an HRA. So you want to talk to your preferred benefits rep in the event you wish to add the over-the-counter and the menstrual products to your HRA plan document. So before I go on to unemployment assistance, one other thing. For the over-the-counter meds, it is going to take the pharmacies and retail vendors several months to program the debit card machines to swipe at the point of sale for those over-the-counter and female items. So your folks may try to get coverage for those right now, and they'll have to submit a manual claim. So for the unemployment assistance, this is another really good piece of this bill. We discussed last week that the FFCRA only applied to private employers with less than 500 employees. The new CARES Act unemployment assistance applies to all size employers, including government entities, nonprofits, religious organizations, self-employed individuals, which is a really big addition, independent contractors, and part-time workers. So how does this unemployment assistance work? The Act provides a federal subsidy to each state's unemployment system. This assistance allows states to waive the waiting period for eligibility. It increases the weekly benefit by $600. That is a flat amount and not based on your income. It also provides an additional 13 weeks of coverage to unemployment insurance. For example, if the state's maximum benefit is $500 per week, the federal amount would be $600 a week for a total weekly benefit of $1,100. States typically have a 1-week waiting period for unemployment to kick in, which will be waived, so benefits would start immediately. The federal government is going to provide that funding to the states that choose to waive the waiting period, of which Ohio, I believe, is one that did opt to waive that waiting period. Most states have a 26-week unemployment benefit. This CARES Act would extend the benefit to a total of 39 weeks. There's also funding to support states that develop a short-term compensation program for employers who reduce hours in lieu of a layoff. There would be a partial unemployment benefit available when employers reduce hours, say from 40 hours to 20 a week, in lieu of laying those employees off. Federal government will fund 100% of the cost employers incur by retaining those employees at the reduced hours. So here's a weird twist to the bill. If you are able to make a charitable contribution during this crisis, the CARES Act allows an eligible individual to take a qualified charitable contribution deduction of up to $300 against their adjusted gross income in 2020. So that is new, and it's designed to help these charities that need the help during this crisis. So to see if you qualify for the deduction, you want to talk to your tax advisor, but it's really for certain publicly supported charities who are really under financial stress due to the crisis. So student loan payment assistance. We've all seen in the news that the federal government had already waived 2 months of payments and interest for many federal student loan borrowers. The CARES Act extends that payment suspension for any student loan held by the federal government until September 30th of 2020. It also protects students from going into default for non-payment of their loan during this time. Other major student loan services are also allowing deferment of payments. An employer could also provide a student loan repayment benefit up to $5,250 annually to employees on a tax-free basis by December 31st of 2020. So how does the CARES Act impact your retirement account? This is another benefit that is designed to help everybody through this crisis. Since the IRS delayed the tax filing deadline to July 15th of 2020, individuals also have until then to make a contribution to their IRA. The CARES Act also established a hardship withdrawal for participants who are affected by COVID-19. Affected means you or your spouse or your dependent had the virus and you were financially impacted due to layoff, furlough, quarantine, or you were unable to work due to childcare issues. You can withdraw up to $100,000 from your retirement account with no penalty for early distributions, and you can spread the taxable income or repayment options over a 3-year period. And that early withdrawal penalty is 10%, so that's what's waived. If you are 70 and a half, you can delay taking the minimum distribution due to the downturn in the market because of COVID. If you are an employer with a defined benefit pension plan, you have until December 31st to make your funding obligations. If you choose to do any of these, please discuss a plan amendment with your fiduciary or your plan advisor. So what other aid for small businesses, including nonprofits, is available? The CARE Act allocated almost $350 billion to help small businesses keep workers employed amid the pandemic and economic downturn. There are emergency grants and low interest loans available through the Small Business Association. These loans can be forgiven if the borrower maintains their payroll for 60 days during the crisis or they restore their payroll afterwards. These loans are to be used for payroll, rent, or utilities. So a little bit more information on how these work. The additional aid allows an employer, including self-employed individuals and nonprofits, really big deal, to defer payment of the employer's share of the Social Security tax. And Social Security tax is 6.2% of employee wages, and that payment can be spread over 2 years, half due by December 31st of 2021, and the other half due by December 31st of 2022. This also provides refundable payroll tax credits for 50% of qualified wages paid by the employers up to $10,000 per employee. That credit is available to employers who, one, their operations were fully or partially suspended due to a COVID-19 related shutdown, or two, their gross receipts declined by more than 50% when compared to the same quarter in the prior year. Small businesses may be eligible for emergency grants of up to $10,000 to cover immediate operating costs. And small businesses with current Small Business Association loans may have up to 6 months of payment waived. So again, these can be forgiven if your payroll is maintained and your loan funds are used for payroll, rent, or utilities. So state legislation, those of you that have locations in other states, remember that every state is releasing some of their own individual legislation. I'm a big fan of watching Governor DeWine and Dr. Amy Acton every day at 2 o'clock. Here in Ohio, we have jokingly called that Wine with DeWine. But I do think it's really informative to pay attention to what your state legislators are doing on top of the federal relief. So just like we saw with the healthcare plans, the Ohio Department of Insurance, as of March 30th, implemented a 60-day grace period for property and casualty, life insurance, and long-term care insurance policies within the state of Ohio to give their insureds at least a 60-day grace period to pay those premiums during this state of emergency. This means that the insurers are required to offer payment accommodations, such as allowing consumers to defer payments at no cost, extending payment due dates, or waiving late or reinstatement fees where consumers are unable to make timely payments of premium or fees due to COVID-19 related disruptions. In closing, we will keep you updated. Thank you so much for attending. We appreciate every one of our clients. Please send any questions to info@prefben.com. We will compile the questions and send out a response. We will also get this PowerPoint and recording out to all of our clients. And everybody stay healthy and safe. Thank you so much.